Friends, in this video for I Thought Wealth, I am going to talk to you on the topic playing the tortoise game. We have all heard the old story of the hare and the tortoise. In the investment world, we keep hearing that again and again. Many companies which do very little for a long time still beat companies which do a lot in a short burst of time. We all know the Chinese bamboo example as well, where a short spurt of growth makes up for a long period of wait. So, effectively, the cycle time of an investment is longer. That's what both these things tell you, and you need to be in that game for a long period of time. There are times when you identified a company in 2001 and the stock starts moving in 2007, and then it goes many hundred times over the next 12-13 years. I've seen that in several companies. So if you're an investor who's wanting to participate in one of those, after all, it's a dream of all of us that we should buy at least a few companies like that in our lifetime. Then we need to have that culture of waiting. We need to have inordinate patience, and we need to have conviction which keeps us going for very long periods of time. Clearly, investing for such performance is a tortoise game, or even better, the results will be like the Chinese bamboo's growth. That's not going to be easy in a time like this when everybody is chasing momentum. Everybody wants the investments to move very fast. The market's favorites are all going up every day. So when I tell you that you have to buy something which will do nothing for 5 years, you probably won't even want to listen to me. But personally, I have to listen to myself, and that is what I am articulating to you today. This is not something I am telling you. I am telling myself this because in this market context, I see a need for me to personally prepare for a very long period of time, get into investments which people won't like for a long period of time, staying in them for extended periods of time with conviction, following them very closely, having a hawk-eye monitoring of the investment and the business fundamentals of the company, ensuring that I don't lose patience while others become impatient, taking drawdowns in my stride and seeing if I can scale up my position in those companies during those periods of market corrections. So it's going to be a period where investment conviction has to be built, has to be maintained. The josh should be high even when you don't see evidence. So that is something which is going to be very difficult to do given the current market context, and that is why the tortoise game is not going to be easy to play from here. It was quite easy from 2010 till 2017. It has been a little difficult between 2017 and now, though there have been a few stocks where it has played out very well for me personally. But I recognize that going forward, it is going to be much more difficult because the markets are now at a high. Either the markets will go even higher, denying me the opportunity to participate, or the markets may go low very fast, taking even companies which have not participated in this rally, where we are looking to invest, lower along with the broader market. The revival, if there is a correction, is going to take much longer. So the game will slow down. When the game slows down, you're going to sweat. It's going to be humid, it's going to be suffocating, and it's going to be boring. So you have to stay in the hunt, waiting long periods of time for your idea to gather momentum once again. I'm saying this at a time when the momentum is running high, the josh is running high, people feel that it's very easy to spot winners. I recognize all these things, but if I want to spot a company where the valuations is so low that I am able to get in, I am able to buy a decent position and I am going to hang in there for 5 years or 7 years, then that game has to be played very differently from what everybody else is playing. So if you are one of those guys who wants superior returns, who wants to buy something which no one else is buying and who wants to hang in there for long periods of time, make your choices aligned to those expectations. Don't try to buy companies which are, doing well and may not do well the same way over extended periods of time. So you need to pick your companies where the business fundamentals don't change drastically, where growth will be reasonably consistent, where capital allocation won't be too bad, where the market is mispricing it now or likely to misprice it even more going into the future, where you will be able to build a significant position and then stay in the hunt. The most illiquid stocks have been my hunting ground, and I've managed to do that in the past. I am hoping that in the future also, at least a handful of companies will give me that opportunity, and it's going to be a tortoise game for me, because that's where I see returns getting better and better over extended periods of time. Whatever I've learned in the last 10 or 20 years doing that tells me clearly that it's better to be a tortoise than to be a hare chasing momentum. To me, that style looks more attractive. Whatever style you choose, play true to your style, stick to your philosophy, make your investments patiently, stay convinced for long periods of time, and stay in that investment idea long enough to reap the maximum benefits that the idea can give you. Don't be a hare after investing like a tortoise. Thank you very much.